Namaste, hearty welcome to yet another PFIC session. Thank you very much for joining us today. People have started to call me PFIC guy or Ask Ananda. So thank you very much for all the love, encouragement that you give. That's what encourages me to come up with videos like this. Yeah, thank you very much. So hearty welcome everyone. Today we are covering a very serious and very practical US tax topic for Indians living in America. PFIC cleanup strategy. So this presentation is built around a real world style case study. I bring in mostly live cases so that people can relate to it. An L1A executive, high income, large Indian mutual fund holdings and PFIC reporting was missed. So this session is not just about forms, it is about strategy, sequencing and fixing the past in a way that protects the future. If you are on H1B, H4, L1, L2, green card, US citizen, you become a US resident, you still hold Indian mutual funds, please stay with me till the end. Okay, so you can choose not to do what I am telling you in this video. Yeah, but know what needs to be done. Yeah. See, many people think Indian mutual funds are just normal investments. In the US tax system, they can become a completely different beast. How many of you here hold Indian mutual funds or know someone who does? Share this video with that person. Yeah. Now, see here, it gives you 4 facts that makes a case like this dangerous. Number 1, the client is high income. Number 2, the client has foreign pooled investments. Number 3, the client is in immigration sensitive phase. So probably is applying for green card or something like that. Number 4, form 8621 was missed. So when these 4 come together, there is no longer, we can call it a simple tax return issue. It becomes a tax planning, compliance and documentation issue. If you are high income and you assume your preparer asked every international question, that assumption itself can be costly. See, at the end of the day, preparer is not responsible. You cannot blame this on the preparer that he never asked and all this. Ignorance is no longer a bliss. Earlier, the rules were different, but now the way immigration guidelines and other things are strengthened, and with so much deportation and other things happened in the past, I suggest that you clean up or at least get a consultation on cleaning up. And people who are too young, you feel my pace is little slow, please set the video on YouTube to 1.25x or 1.5x, okay, because I also have elders who are watching it. Now, the problem, what was missed? See, here is a classic pattern. FBAR was done, but PFIC was ignored. That means part of international compliance was handled, but the PFIC part was not. Please remember this, FBAR compliance is not PFIC compliance. FBAR compliance is not PFIC compliance. FBAR is one reporting system, PFIC is another. People often think I told my CPA, about my foreign account, so I must be safe. No, not necessarily. F bar was done, but PFIC was ignored. And F bar compliance is not PFIC compliance. See, a taxpayer may disclose an Indian bank account on F bar and still completely miss Form 8621, the PFIC form for Indian mutual funds, held through that same broader financial relationship. Now, have you ever seen a return where F bar was filed but nobody asked about mutual funds? That's why we keep that question, in the tax organizer also. Some people, like they feel, why I have to fill the organizer? You have all my details. Okay, all your details are there, but every year, एक दो छोटे amendments होते रहते हैं. So just एक बार देख लेना आप अपने tax organizer को देख लेना. See, if an accountant is asking you questions, it means he's a good guy. I mean, you feel discomfort when the person is asking you questions. The person is not at loss. You know who is at loss. So please be submissive to your accountant or preparer. You're not happy with the consultation, go connect with somebody who is experienced in that field. सबका सुनो लेकिन अपना करो, लेकिन सुनो पहले आप. Next. Now, PFIC, as I always say, it's the worst tax treatment in the US. Now, why is PFIC feared so much? Because under the default PFIC regime, which I've explained in the earlier 5 videos also, what looks like a normal investment can become a complicated tax and interest problem. The IRS instructions for Form 8621 confirm that this is the form used for PFIC reporting and elections, including mark to market where available. A separate Form 8621 is generally required for each PFIC where reporting is triggered. Separate Form 8621. Okay. So, if a client holds multiple Indian mutual funds across multiple years, this is not one clean summary form. This becomes fund by fund and year by year exercise. Nanda, should I file it every year? Yeah. For the years that you're holding mutual funds, you have to file it. And I humbly warn you, do not casually assume a normal capital gains mindset applies here. Getting it? PFIC is different. PFIC is different. Now, here I want to be careful. See, I do not mean the IRS publishes some exact, audit target chart or something like that. But I do mean that a high income taxpayer with foreign assets, cross border history, and immigration timing should treat compliance very seriously. This is not about panic, this is about discipline and compliance. The more visible and more complex the profile, the more important it is to file consistently and correctly. So, this is a high stakes compliance profile. I don't want to say, that you are definitely in the IRS audit target range or anything like that. Compliance. आप US में settle हो रहे हो, green card है, US citizen हो, or you are establishing, your future in the US, then it's very important, that you fix these things. Now, what went wrong here? See, these are the most common mistakes. One, the preparer never asked the PFIC question about mutual funds. Two, the taxpayer assumed Indian mutual funds are treated like US mutual funds. Three, no PFIC election was made on time. And four, no PFIC form was filed. That is 8621. So, this is why I always tell people international tax mistakes are often not caused by fraud, they are caused by incomplete questions. People don't have patience. They feel, I'll just upload my W2 1099. Ab dekh lo, last year return, dekh lo. Dekh lo. Then somewhere things get delayed, they'll write a mail to me. Nanda, I have been your customer for, I know you from that time. What is this, that, and all. एक अंदर की बात बोलता हूँ मैं. प्लानिंग करो आप. With me, I give top priority to those clients who are in planning. Or else you are just some other customer in our database. With all due respect, I'm telling you. You expect, PFIC files to be done in like 24 to 48 hours, just like, any other, regular simple W2 file. हम तो हम में तो उतनी काबिलियत नहीं है. We are not that capable to deliver you PFIC in 24 to 48 hours. Me and my team, we are not that capable. You have to give us time. I mean, when accountant is asking you questions, you must be patient enough. I mean, take an extension if it is needed, but ensure you file it right. Don't put pressure on yourself. Don't put pressure on us also, or any preparer. Even if you are somebody watching from another CPA firm. See, now it is April 10th, 2026. I'm making this video. Just 5 days, for the tax season to close, and all EAs, CPAs, their team will be under so much pressure. So don't try to get the things done, before the deadline. Yeah, if you've paid, like 1 month before, 2 months before, yeah, great. Anyways, I'll talk to you about that also. See, a very sophisticated taxpayer can still miss PFIC if their preparer is excellent in domestic tax but weak in international tax. I mean, don't blame your local CPA also. He never told me this, Nanda, you, and all. I mean, this is PFIC. Foreign ka hai yaar. A local American guy, what he will know? I'm not criticizing or demeaning anybody. उतना knowledge नहीं रहेगा इनको. If they have it, great. And that also comes with experience. You ask a recently passed CPA about any of the questions, from our 5, 6, this is the 6th PFIC video. A recently qualified CPA. Ask them, what is this SDOP, SFOP, PFIC, mark to market election, QEF. Just ask them and see if they are able to tell you without doing a Google. So, keep talking. Tax planning is not the same as tax filing. Tax filing ke liye you really don't need somebody. You upload the documents. If you have filled everything right, it gets done. But planning ke liye you need to have consultation, and that's important. Now, here, two paths. Choose wisely. Two paths here. This, I can call it as a decision moment. Ignore or delay. Ignore, delay, or fix it properly, let's say. Ignore, delay, or fix it properly. The streamlined IRS procedures exist for taxpayers whose failures were non-willful. Non-willful. For US resident, that usually points to SDOP if they qualify. I'll tell you what that is. Now, for taxpayers meeting the foreign non-residency rules, SFOP may apply instead. Okay? अगर आप US में हो, आपने पास्ट मिस किया तो SDOP applies. अगर आप इंडिया में हो and you're a green card holder or a US citizen, then SFOP may apply instead. So the right question is not what feels easiest today. The right question is which compliance path is valid under the IRS rules and best for my case. Don't say, my friend, you ignored this kind of the. जब बचपन से अपने टीचर्स बोलते आते हैं डोंट कंपेयर, वही बोलूँगा मैं. हर एक का केस स्टडी अलग है, इनकम अलग है, फैमिली स्ट्रक्चर इज डिफरेंट, job structure is different, the longer they are going to stay in the US is different. So don't compare yourself with anybody. If you discover any of these problems today, it's up to you if you want to ignore it, delay it, or structure it. Okay? Now, wait a second. Now, let's see what is this SDOP. See, SDOP stands for Streamlined Domestic Offshore Procedures. Okay? Streamlined Domestic Offshore Procedures. So, this is an IRS pathway for certain taxpayers residing in the US who previously failed to report foreign financial assets or related tax, where the conduct was non willful. The IRS domestic streamlined page, it lays out the eligibility conditions. So this is not a free pass, for intentional evasion. This is a structured disclosure process for correctable, non-willful, non-compliance. यानी correctable, non-willful, non-compliance. Intentionally नहीं किया आपने, गलती से हो गया. It's a structured disclosure process wherein disclosure was like non-willful, ignorance. But if your facts are willful, then this is not the right path. No. Let's see this. See, one of the biggest reasons SDOP matters is that it creates a more predictable penalty framework. Under SDOP, the miscellaneous offshore penalty is generally 5% of the highest aggregate balance or value of certain foreign financial assets subject to penalty. That doesn't mean the case is cheap. There may still be tax due. There may still be professional fees. But it converts a chaotic problem into something more structured. Getting it? Many clients can emotionally handle, a defined process better than an unknown exposure. Now, let me tell you deeper. What we file, SDOP में क्या होता है? See, for a domestic streamlined submission, the package generally includes 3 years of amended or delinquent returns, यानी past returns, 6 years of FBARs if needed, and then something called as Form 14654, which is the certification for US persons residing in the US. Okay, ये 3 चीज, last 3 years amend, last 6 years के FBAR, and then ये non-willful statement explaining the PFIC omission by गलती से हो गया 14654. It was not intentional. Now, in a PFIC case, those amended returns are not simple amendments. They're not simple amendments. Each applicable year may require Form 8621 for each applicable PFIC. Okay, so when your accounting is telling, when your accountant or preparer is telling you the PFIC charges, all that you don't do, okay? Just look at the penalty, taxes and all. शायद आप उसमें एक 2% भी पे नहीं कर रहे हो. I mean, some people are very different. They want compliance, without any currency, without any investment. So, and they want it cheap. Please don't do that. I mean, just like how you do for a tax filing, that person is giving this much, this person is giving this much. He reduced $10 less, $20 less. भाई, अगर आप ऐसे कस्टमर हो, हमारे पास पिफिक के लिए, टैक्स फाइलिंग के लिए भी मत आओ. If $20 is very heavy for you, you should stop the video here itself. Investing $10 per month for planning, we charge like some $60 or something, for a consultation. So if $60 for a 6 months planning is too much for you, stop the video here itself. Don't watch it any further. I mean, you cannot reap without sowing. And good consultation, you don't get it just like that. Now, SDOP penalty. Let's look at the maths. Here, roughly speaking, if the portfolio is around $600,000, 5% gives you about $30,000 of miscellaneous offshore penalty exposure under the streamlined structure. Okay, plus any corrected tax due. And that's why strategy starts with the tax estimates. Clients need to know the size of the cleanup before they decide how to proceed. $30,000. If you were the client, would you rather face a structured number or an open ended future problem? क्या करोगे आप? Now, see, I want to present this uh, carefully here because it's on YouTube. See, I would not say every missed form 8621 automatically creates, that exact penalty in every case. But I would say this: missed PFIC reporting over multiple years can create very large information return and statute related exposure if the IRS identifies the issue outside a valid disclosure path. So, the point that I'm still trying to emphasize here remains correct. Structured cleanup is usually far better than waiting for the problem to become visible on its own. Getting structured cleanup. I don't want to say IRS will automatically charge, $10,000 for every missed 8621 in every case. As a name. Now, let's see. The three-step master strategy. Step 1, clean up the past. Clean up the past. Step 2, reset the PFIC position in a defensible way. And then step 3, choose the right going forward method. And this is the biggest lesson, in the entire presentation that I'm making today. PFIC problems are solved by sequence, not by random filing. Agree? Not all tax softwares also can do PFIC. Students and fellow peers, CPAs or EAs. Yeah. I mean, while you may feel, competition in the industry, I think we have to collaborate together in making the client knowledgeable. Some CPAs started asking me, have you tied up with IRS? You're scaring clients. No, I'm educating clients. I can't see my clients crying. If I'm talking to 10 clients, one or two clients, they cry over the call. They had that money set up for something. I mean, इंसान है यार हम सब. दुख पहुंचता है. Please be careful. Please be careful here. At least know, what needs to be done on your case. Now, let's see, what is this purging election? See, in plain English, this is a reset concept. Reset. It treats the PFIC position as though it were sold and rebrought for tax purposes, creating a cleaner future starting point. Now, let me caution you here. Purging election is a useful teaching label, but the actual technical execution can be more complex depending on the facts and the election mechanics that you choose. Right? We spoke about QEF, MTM, and all. So treat this as a strategic concept and not a do-it-yourself checkbox. Okay. Nanda, I'll file PFIC myself. I mean, if you're able to file PFIC yourself, I think you should look for some part-time opportunities in highly tax LLC. Seriously, if you're really skilled like that. Same, my mail ID is same. If you are interested in the tax works, I mean, I run an academy also, Elite Tax Academy. So if you're really able to do a PFIC form yourself correctly, great. I think you should be in our team. Or else please hire a proper tax preparer. Getting it? So that's about purging election. Now, let's see what is this mark to market. See, the IRS instructions for Form 8621 say that a shareholder may elect, okay, mark to market under Section 1296 if the PFIC stock is marketable stock. So, in practical terms, year end value is compared to basis. The annual increase may be recognized as ordinary income, not like capital gains. So, instead of a terrifying look back approach forever, the case becomes more annual and more manageable. Marketable stock. Remember that. If the PFIC stock is marketable stock. And do not assume every foreign fund automatically qualifies to be a marketable stock. Hmm? And something very important, MTM is prospective, not retroactive. What does it mean? In other words, you do not get to look back at old years and choose MTM later just because it now looks better. That is why timing matters so much. Elections are not just math decisions, they are timing decisions. Really? How many of you ever wished you could go back and choose a better tax method after seeing all these videos and tax estimates from our guys? Now, a question may arise, why not simply amend Nanda and apply, MTM? Now, this is the misconception I hear all the time. Can't we just amend old years and apply mark to market? Usually, no. No. See, amending a return to fix reporting is one thing. Now, retroactively creating a valid MTM election for an old year is another thing entirely. Remember this, amendment does not automatically equal election. Getting it? Amendment does not automatically equal election. And this is exactly, where half knowledge become dangerous. I mean, EAs, CPAs, or people in the industry who are working on PFIC, the taxes client pays, the interest penalty involved. So if you don't know something, say don't know. Just because the invoice is high, don't take up the case and put client to risk. A humble request. Probably, work with us. We can help you serve that client. But be double sure when you're guiding client on PFIC. Or else don't take up the case. Now, 2025 filing strategy. See, if the past is still being cleaned up, do not rush the current year tax return. I mean, if you're filing for 2025, just because the filing season is moving fast. I mean, this client was awesome, wonderful person. He completely trusted, he obeyed. He also did some research and he gave me references also, like some other person who is interested in doing that. Persons. For many complex cases, especially PFIC, extension first, taking an extension is the smartest move. Like Form 4868 is the IRS extension form for individuals, and it gives only time to file, not time to pay your taxes. Remember that. Extension gives you 6 months additional time. So if April 15th is the due date, then October 15th, 2026 will be the due date for filing your 2025 returns. If you are watching this video some other year, just years change kar lijiye aap. Now, again, extension needed. If it's a PFIC case, you are coming now in March, April and all. I told you, we cannot do it in jet speed. We are not some AI tool. We are normal human beings. Okay, so we need some time. A rushed, clean looking return can be worse than a strategically extended return. So, जहाँ भी आप फाइल कर रहे हो आराम से करिएगा. टैक्सेस कुछ है तो पे कर देना. You will get that back as refund if you paid extra. But take extension, you will not have the late filing penalty and all. Now the new deadline, October 15th, 2026. See, taking an extension doesn't mean we are slack in our work. I mean, when I say we, preparers, they are slack in their work, or you are lazy, in approaching the preparer. It gives that planning space. The IRS extension rules are clear: more time to file, not more time to pay. So, if the cleanup suggests extra tax could be due, payment planning still needs attention by the original due date, that is April 15th. And that is the strategic difference, between an extension and delay. So, plan things properly. No, I'm okay with, paying interest, on the delayed filing and all. Let's do this, July, August tak khatam kar denge. Up to you. That's your choice. But we say, simple extension kar do. Bas, kuch taxes pay karna hai to pay kar do. But extension to le lo. Okay. Why extension is critical? Because filing early can lock in the wrong sequence. Cleaning up old years after a current year return is already filed may create visible inconsistency. I mean, you file the current year return and then you clean up the old return. That creates some inconsistency. So, extending first gives the advisor room to line up the story properly. In cross border tax, the calendar is often part of the tax strategy. And amended returns, it takes 12 to 16 weeks for processing. 4 months also, you can say, 4+ months. So don't think that, my accountant did something. You can just go to IRS website also. Whatever IRS says, amended returns, or Google, J Google, how much time does it take to process amended returns? It will tell you 12 to 16 weeks or something like that. उससे 1-2 weeks extra add कर लेना, practical. Now, 2026 trigger event. If you want to take a break and come back, please come back. Okay, I'm just making a continuous flow so that you don't miss the flow. Now, the sale forces action. See, a sale changes everything. Things are all fine, as long as you're just holding the mutual funds, and not selling it. But a sale changes everything. The IRS Form 8621 guidance specifically includes recognizing gain on a direct or indirect disposition of PFIC stock as a trigger event. Disposition means sale, transfer. So, if a taxpayer was passively sitting on Indian mutual funds before, a sale can turn an ignored PFIC issue to an immediate filing issue. And that is why I often say you can ignore your fear for a while, but you cannot ignore a sale. A sale changes everything. You cannot ignore a sale. So, is there anyone here who sold an Indian mutual fund after moving to US without first checking the PFIC impact? Please watch our videos. Yeah? Now, immigration risk. I want to present this carefully. Okay, green card in danger. I would not say PFIC automatically destroys a green card case. That would be too absolute. But I would absolutely say that unresolved tax compliance issues are not helpful during immigration sensitive periods. A clean, accurate, well documented tax history is always better than a history that later needs explaining. Getting it? So don't say, to clients, whether it is team or peers in the industry or even students from iLeague Tax Academy, PFIC issues directly cause green card denial. Don't scare the client. Okay, बोलो कि भाई ये आप सुधर लोगे तो अच्छा है आपके लिए. अच्छा है आपके लिए. Or else, tell them the penalties and all. And it's up to them to make the decision. Now, let's understand this. SFOP, SDOP. Which one applies? See, the IRS has separate streamlined procedures for domestic and foreign cases. The foreign version can provide broader penalty relief for eligible taxpayers meeting the foreign non-residency rules. Then the domestic version applies for qualifying taxpayers in the United States. So the right question is not which one sounds better. The right question is which one support your case, your facts. Getting it? So know whether SDOP applies or SFOP applies to you. Now, in this client, for this client, only SDOP is applicable. Okay, SDOP is the correct streamlined path for this client because he is in US, not in some foreign country like India. That conclusion depends on the residence and non-residency tests that we do on a particular client. The IRS domestic streamlined page confirms that taxpayers in the US who do not meet the foreign non-residency requirement foreign non-residency requirement look to this kind of domestic procedure if they otherwise qualify. So to put it simply, do not choose the program based on hope or some Google or AI tool. Choose it based on the facts, based on the laws. Getting? Next. FTC, foreign tax credit. It's kind of a partial relief, okay? Now, this is where many Indian taxpayers get surprised. They say, Nandaji, I paid tax in India. So won't that fully eliminate US tax? Sometimes, no. Foreign tax credits may help, but PFIC character, timing, and recharacterization can prevent a full offset. So, foreign tax credit is a relief, but not a complete solution. Okay, a taxpayer may pay Indian capital gains tax and still face significant US tax here because the US does not always treat the income as capital gains but as ordinary income under the PFIC rules. I told you in the earlier 5 videos also. अगर आप ड्राइविंग करते हो या वॉकिंग करते हो, नहीं वांट टू वॉच इट विद द फ्रेंड्स ओवर अ वीकेंड, जस्ट चला लो देख लेना. Some questions may come, or just watch it alone when you feel that's the best time to fix these things. Now, documents required. Okay, what are all the documents that is required? See, PFIC work begins with documents. Okay, consolidated account statements, transaction history, historical NAV data, bank statements for the years you are filing for FBAR, DMAT or holding reports if available. All these things take time, and how our guys back in India work in some mutual fund companies, not all. Okay, now for FBAR, FinCEN, like Financial Crimes Enforcement Network, FinCEN बोलते हैं उसको, it requires reporting of foreign financial accounts if you hold more than $10,000 outside of US in foreign financial accounts. And it also provides an automatic extension up to October 15th in case you miss the April deadline. This is only for FBAR, not for PFIC. Okay? But for PFIC, I suggest you take an extension. So you have bad documents, it means you have created a bad strategy. Okay? Now, here, execution timeline. If you are not coming to us in the tax season, but in the off season or something like that, I mean tax season ke baad, we would definitely need some 2 to 3 weeks to clean this. So if the client is responsive and the documents are complete, you can move from data gathering to fund analysis to return drafting to final submission in a few weeks. Okay. Now remember that in PFIC cases, speed is not the goal. So don't send me emails on SLA. Nanda, I gave this 1 week before. I may have clients from 1 month before. Because data, conversation keeps happening. So clean sequencing is the goal, not the speed. Okay. Now, final strategy summary. clean up the past. Okay, getting it? Clean up the past. Reset the PFIC position in a defensible way. Use the right going forward method and then extend the current year filing if needed, so the filing is not rushed. This is how you move from PFIC chaos to future, safe compliance. Important. Okay. Now, see, normally, uh, I like the tone of this slide, like your investments may be excellent, but your tax structure may still be wrong. This is not some fear marketing, my dear clients. This is a corrective strategy. We fix once correctly and then simplify the future. Wherever you are practicing this, I want you to know these things. Okay. And as I always say, don't just file your taxes, plan them. A real PFIC consultation should answer three questions. One, what is the exposure? What is the exposure? Two, what is the correct compliance path? Three, what will the structure look like going forward? When I say what is the exposure, Dudu, Dabu, Kasu Panam, how much you have to pay, Paisa, penalties, interest, taxes, and what is the correct compliance? Again, action differs from person to person. And then what will the structure look like going forward? So, if your tax advisor or tax preparer is not able to answer those three, you do not yet have a PFIC strategy. You only have fear. Oh, that person is doing return for $20. Please go file with that person only. PFIC or high profile cases are not handled like this. They're not handled like this. Strategy comes first and filing comes second at ILAT. It's very important, if for somebody who is handling cross-border taxes, especially for Indians in the USA with PFIC, FBAR, FATCA, or even, transition issues, real estate things, NRE, NR accounts and all, you need a planning approach. I mean, planning first approach, not filing, not just, some software data entry. Strategy first, planning first, then filing. Now, let me say this once again. This presentation is educational only. This is not done to scare anybody. Your case depends on your facts, your years, your residency history, your investments, and your prior filings. Please do not copy a YouTube strategy into your life without proper review and consultation with an expert. Make sure the person who is signing your return is a EA, enrolled agent, or a CPA, certified public accountant, or a tax attorney. Only these three people can represent your case, not somebody who started a business filing returns for $10 and all. Kindly come out of that. If this topic made any sense to you, gather your statements, get a professional analysis before you file anything. I love my clients very much. As I love my students, I love my clients also. इतना बड़ा रिस्की इन्वेस्टमेंट करते हो आप, टैक्स कंसल्टेंट के फीस के बारे में सोचते हो आप. आई डोंट नो what I should call some of them. Over the past, I have been getting some emails, okay, like a software engineer on H1B moves to US in 2023. He keeps 40 lakhs in Indian mutual funds, files FBAR, but never mentions the funds to his preparer, EA or CPA. 2 years later, he redeems one fund for a family emergency. Now, that sale becomes the event that forces PFIC reporting. You're getting it? Because he sold it for a family emergency. But वो तो फैमिली इमरजेंसी था, और क्या करता बंदा. बंदे ने सही किया, बट नंदा का भी बात सुनो. बंदा का दर्द समझ रहे हो, नंदा का भी बोल समझो. A vice president on L1A has Indian mutual funds brought while living in India, then later becomes a US tax resident. He assumes old India investments are outside US tax concern. That's a classic misunderstanding because US resident taxation and PFIC rules can still matter after residency begins. Another case, a green card holder pays capital gain tax in India on a redemption and assumes the US foreign tax credit will cancel the US tax. In many PFIC cases, that expectation fails. That expectation fails because the US treatment can be harsher and not perfectly aligned. Then another case, a family used a prestigious preparer for years and assumed no major international issue could have been missed. But PFIC is specialized enough that even sophisticated taxpayers can have incomplete filings if the right questions were never asked. Now, like people do send me emails. Okay. People do send me emails. Nanda, I filed F bar. Am I safe? No. No. F bar and PFIC are different systems. F bar does not replace Form 8621. Then another question is, I never sold my Indian mutual funds, Nanda. Do I still have a PFIC issue? Possibly yes. A sale makes the issue more visible, but the lack of sale does not automatically eliminate PFIC concerns. You should get a consultation. Then another email was like, can I just amend and take MTM for old years? Usually no, as I said in the video. Amending to fix reporting is different from retroactively creating a valid mark-to-market election. Then question 4. Does every Indian mutual fund automatically qualify for MTM, mark-to-market? Do not assume that. See, MTM depends on whether the stock qualifies as marketable stock under the rules. Then question 5. Is SFOP always better because the penalty can be lower? See, only if the taxpayer qualifies under the foreign non-residency rules. SDOP, SFOP, both are not same. The better program is the one your facts support. Next, if I take an extension, can I pay later too? No. Extension is for filing only, not for payment. What happens if I pay later? Interest will apply. Next, will PFIC problems automatically damage immigration? I don't want you to think like that. The better way to look at it is that clean tax compliance is preferable during immigration sensitive periods. Next, if my preparer missed it, does that prove non-willful? Not at all. It may support a non-willful explanation, but the overall facts still matter. As a taxpayer, you are responsible at the end of the day for your tax return. So be very, very careful. And before I close, I thought I'll just make a little request here on the daily tax tips. At iLead, we send daily tax tips to people whose email addresses are in our database. Whether they are our paid clients, unpaid clients, people who registered with us at some point, people referred by others, or people who connected with us in the past, my LinkedIn connections or anybody. So please do not look at these daily tax tips as some marketing material. They are genuinely meant to be knowledge material. Getting it? Genuinely meant to be knowledge material. Most of these tips take only like 1 or 2 minutes to read. They are completely free. That's the best part. They're completely free, and many of the points we share in those tax tips are things for which people otherwise, pay for consultations. So my humble request is this: when you receive a daily tax tip from iLead, just give it a quick read. If something applies to you, You can always schedule a consultation with me or with our team or with your accountant also. But if something does not apply to you, it may still apply to your friend, colleague, relative, employee, or someone else in your network. Tell your company also to organize any free webinars. Share the video. Ask your HR or somebody, to pass it on, to the entire workforce. That will benefit them also. And one more request, please do not rush to unsubscribe to those emails. I'm okay if you don't file your taxes with us, but gain knowledge. Gain knowledge. Because you see, tax filing happens once a year, but tax planning should not happen once a year. Tax planning should happen at least twice a year, and I personally recommend 2 phases of tax planning. Phase 1, after the tax filing season is over, when you understand your prior year return and plan for the first 6 months of 2026, the current year. And phase 2, before the close of the year, September, October, November, so that you still have time to make decisions that can actually reduce your taxes. And this is very important, because waiting until tax season, after you get your W2, after the year is already over, when the preparer, EA or CPA is already in the peak filing flow, that's usually too late for real planning. At that point, most of the work becomes compliance, compulsory, not planning, and that doesn't help the client fully. And it also doesn't help the preparer, because the best planning opportunities usually have to be implemented before year end, not after the year end. So please do stay connected to our daily tax tips, subscribe to our channel, like our video, spread the awareness, read them, benefit from them, forward them, use them, and whenever something needs deeper discussion, book a consultation with me or my team, or write to me, asknanda@ileadtax.com. And thank you so much for your time, your trust, and your attention. I'm able to make all these videos just because of the love, support, encouragement I get from each. Thank you very much for being part of iLead. See you soon in the next iLead Tax Talks. Take care. Bye-bye.